Hey, Alan here. Let me guess. You want to know if it's worth it to incorporate your business. Well, as a CPA with over 10 years experience managing online and traditional business accounts, I can honestly tell you that yes, it is worth it to incorporate your business. Most of the time. Let me explain. Since each business and situation is different, let's review the major pros and cons you consider before you decide whether to incorporate your business. Let's cover the pros first. Number one, tax benefits. That's right. You get a ton of tax benefits in the forms of tax-deductible expenses, tax credits, the ability to carry a business loss over many tax years, and the ability to not declare your income when you incorporate your business. Undeclared corporate income is not taxed by the IRS, so keeping your money in the incorporated business can reduce your tax burden. Number two, advantageous tax rates. Your personal tax rate for 2022 will range from 10 to 37%. Compare that to the flat corporate tax rate of 21%. So if your business is doing very well and is profitable, you may be able to reduce your tax rate by incorporating your business and only taking out the money that you want to personally use for that quarter or tax year. If you combine the increased tax benefits and the lower tax rates, incorporating a growing profitable business is a no-brainer. Number three, limited liability for business debts and legal issues. If you incorporate your business and establish it as a separate legal entity, that means whatever's happening, it's the financial problems, if it goes bankrupt, whatever happens, it only affects the business itself. And that means that your credit and your assets are not affected by the demise of the business. Nothing you personally own or possess is in danger of being taken down with your business, affected by the bad financial condition of your business, or being snatched by your creditors. Basically, if your business is a separate legal entity from what's yours, and what belongs to your business means that it only belongs to business. Consider this. You get sued by one of your customers for selling a defective product. The customer sues your business. Your business is a separate legal entity, so the court can only take the assets your business owns. The court cannot take your savings, your house, your land, investment portfolio, or your retirement fundings. If you only have a partnership or an LLC, there's product and liability insurance involved, but your product's liability insurance doesn't cover the court's judgment against you. Well, since you and the business are the same legal entity, the court has a chance to go after your personal possessions, financial accounts, and anything else that you own in order to pay your customer who won the lawsuit against your business. But if your business is incorporated, the court's judgment is limited, again, only to your business assets. This is the greatest way to keep your personal assets safe. Try incorporating your business and you'll not regret this decision. Number four, incorporated business have more credibility. Now, I know that there are sole proprietorships and partnerships that do great business and have excellent reputation, but they are not incorporated business. Both of these types of businesses leave their owners open to financial and legal liabilities if things go badly for their business. So incorporated business, like limited liability companies, S Corps, and C Corps, give their owners financial and legal protection. And they do so because they are legal entities recognized by law and other businesses as being independent from their owners. But the best way is still the C Corp. So your business is incorporated, the business community, potential investors, financial institutions, governments see your business as a serious concern, something that will probably exist in the future, and a professional entity. They are not likely to think that your business is a hobby, joke, or something that you do when you're bored. To increase the chance of your business being treated professionally, given the maximum amount of credibility possible, best financing, interest rate, and attracting investors, don't forget to incorporate your business. Number five, continuity. Incorporated business have built-in continuality. After the founders leave the company, because of retirement or dies on the job, the corporation lives on. The business is separate from the founders, from the owners, independent of people who runs it. So banks, investors, governments, suppliers, and business partners are more likely to want to do business with you if your business is properly incorporated. Plus, they know that there are other people there to run your business, make sure it delivers on its promises, pays its bills, even when you're not around. Just know that having a C Corp means that it never dies. They may go bankrupt or be dissolved, but otherwise they live on forever. This is why businesses and people trust corporations more than they trust people. Plus, all the assets of a corporation belongs to the corporation. Creditors are less concerned about your health and family problems if the corporation has assets and is able to pay its debt and keep going during hard economical times using its own finances. That is the advantage of having a corporation over a partnership, an LLC, or sole proprietorship. It's sad, but generally true that when the owner of a sole proprietorship dies, that's the end of the business. Incorporated business has more credibility, trustworthiness, and continuality than unincorporated business. You heard awesome pros about incorporating a business. Let's look at some cons so we have a fair view of the whole situation. Starting with con number 1, additional costs that must be paid to incorporate a business and maintain its incorporated status. These costs include paying a registered agent to represent your corporation, paying for a business address if you're an online business or you're a small business and don't want to use your residential address, incorporation fees which must be paid when you incorporate a business. Some states may require you to purchase a business license in order to operate your incorporated business in that state, license and permits that you have to operate a business, and any other fees that are required by the state when you incorporate your business. If you want someone else to do the grunt work of incorporating and establish your company, then you're gonna have to pay someone else to do it. You may also have to pay some professional service fees when you establish your company. They can include legal, notary, and accounting fees. Number 2, and something we just mentioned, is paperwork. Paperwork is a must here. You need to keep receipts and records of all your business transactions, expenses, contracts. These records need to be documented, explained, and you should have at least multiple copies, and if you're doing a paper copy route or electronic copies that you know there's a backup of. You will need these records and receipts if you're audited by the IRS, state where your business is incorporated, or possibly by the US government. Plus, depending on the state and type of corporations, you may be required to keep a book of corporate meeting minutes, articles on corporation, bylaws, information about corporate meetings, and a registry with information about the directors and shareholders members. Number 3, corporate losses cannot be used to offset your personal income tax liabilities. Those losses must stay within the corporation. They can be carried forward into future tax years and used to reduce the corporation's taxable income in those years. That is one of the advantages of operating a sole proprietorship or general partnership. Sole proprietors and general partners can actually use their business loss to help reduce their income tax liability. Claiming business loss can be a huge benefit if your business loss is a lot of money, but you made a lot of money from other enterprises. What's the conclusion here? Unless you have compelling reason to not incorporate your business, then incorporate it. Do it so you protect your family, your personal assets, peace of mind, and have financial future. If you are still wavering on whether incorporating your business is right for you, then give it some time. Maybe you're a startup, or maybe you're not sure your business is going to make it. In that case, wait. When you give yourself time to think, keep meticulous business records, maintain records of your receipts and business expenses. You're always gonna need them for tax purposes. Your bookkeeper, accountant, or taxpayer will ask for them in order to get you the maximum amount of business expense deduction possible. Also, you can do them to do your annual budgeting, revenue projection, and the future of your family. Another option some entrepreneurs opt for is to not incorporate the business until they earn enough revenue from your business operation to pay for it. If you use the money left over from your business after you pay your taxes and all your bills to incorporate your business, because in this instance, your business is paying for itself, then kudos to you. My best advice is do what's best for you financially and legally. For more information on how to protect yourself financially and legally and reduce your taxes, subscribe to my channel and smash